This is bcd-W current today. Every day. One city, one story, many eyes. Today, Dubai. $324 billion in real estate closed while the war was on. Dubai didn't flinch. The numbers arrived quietly, buried beneath the war headlines. Between March 2 and 9, the first full week of Iran's strikes on the UAE, Dubai recorded 3,570 real estate sales transactions. Total value, 11.93 billion dirhams. That is approximately $3.24 billion in 1 week, during a war. Transaction values had actually risen over the last 3 days of that period. Iranian strikes had hit airports, hotels, and infrastructure. Stock markets suspended trading for 2 days, the first wartime closure in UAE history. An estimated 60% of hotel bookings had evaporated, and yet the property market kept moving. Stability, not panic, was how one analyst read the week. The explanation is structural, not psychological. Dubai's real estate market has been absorbing external shocks for 20 years. The 2008 financial collapse, COVID, oil price crashes. Each time, the combination of tax-free returns, residency-linked investment incentives, and diversified buyer base, European, Asian, African, GCC, kept the floor under transaction volumes. The buyers who move into Dubai real estate are not momentum traders. They are people making decade-long bets on a city. And in the first week of a regional war, those bets kept coming in. How are other cities reading this? If you're in New York, after 9/11, Manhattan transactions paused for weeks. What Dubai shows is a market so structurally incentivized, no property tax, residency rights, long payment plans, that geopolitical shock absorbs faster than almost anywhere else. The question for New York investors: has your market built the structural incentives to match it? If you're in Seoul, South Korea's property market has operated under geopolitical shadow for 70 years. A market with strong fundamentals doesn't need peace to close deals. It needs clarity on the rules. Dubai's rules gave buyers enough certainty to move even while drones were in the sky. If you're in Medellin, Medellin's property market recovered from being one of the most dangerous cities in the world. That recovery was driven by exactly the same mechanism: infrastructure investment, international openness, and a government making long-term bets on the city's future. Dubai's transaction data is Medellin's proof of concept at global scale. If you're in Amman, when the region is uncertain, stable cities become more valuable, not less. The flow of Gulf capital into Amman real estate during previous crises may accelerate again if Dubai's conflict extends. If you're in Tel Aviv's property investors have been running this same experiment longer. Permanent security risk, extraordinary returns, structural scarcity, sustained international demand. They are watching Dubai's $324 billion week with recognition, not surprise. If you're in San Francisco, Dubai absorbed a literal war without flinching. SF has been flinching from headlines for years. The difference is investor confidence in the city's long-term direction. Dubai's government spent 20 years making that direction unmistakably clear. San Francisco is still arguing about what it wants to be. We are looking for more cities. Dubai is on this map. So are New York, Seoul, Medellin, Amman, Tel Aviv, San Francisco, and Austin. Every city has a story like this one, a number that tells you something the headlines won't. If you live and work inside a city where this conversation is already happening, we want to hear from you. bcd-W Current Today is published daily by bcd-W Magazine, New York. Every day. One city, one story, many eyes. Reach us at aabcdwwxyz, mail to aabcdwwxyz, bcd-wwxyz, http://bcd-wwxyz,